With just a few weeks left in the year, I want to share with you a few tax tips to help bring your tax outcome in for a smooth landing. Tip number one, prepare an income tax projection or have your accountant prepare an income tax projection for you. Compare those results with the tax that you have paid year to date. The key here is to make sure that you are in good shape as far as your tax payments are concerned, and if not, what sort of shortfall are you looking at, and what do you need to do to budget and pay those taxes between now and when you file your returns. If you're going to owe a good bit of tax, it's better to know now than to know one day before you file your income tax returns. Tip number two, as a business owner, we tend to wait until the last minute to execute on final tax planning. What I will say to that is that if your final tax planning involves your payroll company running a special payroll for you and your staff to pay out bonuses for you or for your staff, or to withhold an extra amount of tax for you to make sure that you have enough paid in by the end of the year, go ahead and execute that plan now. In the last week of the year, payroll companies are inundated with these requests, and I don't want you to be in a position to where you can't execute on that final bit of planning because the payroll company does not have time to accommodate that request. Tip number three, it is very common for businesses to purchase capital assets at the end of the year. This could be a vehicle for the business owner or for the business itself. It can be equipment, it can be furniture, fixtures, technology, any number of things. The tax rules generally allow for a full deduction of these expenditures in the year that you place these assets into service. Now, what does in service mean? In service means that it is ready to be used in your business. So making a purchase and having that asset sitting in a box in your office is not considered to be in service. It needs to be plugged in and ready to go. One positive is you don't have to actually pay for this key asset until later. And so if you are looking to finance the purchase, or if you have favorable terms from your vendor, that's okay, just so long as the asset is placed in service in the current year. I do encourage taxpayers to get an invoice from their vendors that has the date of purchase in the current year to substantiate that deduction. Tip number four, and this is a bit self-serving, I suppose, but do not wait until the last week of the year to schedule appointments with your professional advisors, your accountants, your attorneys, financial advisors, retirement plan advisors, bankers. All of these advisors have schedules that are just like yours towards the end of the year. They are chock full of business obligations and personal obligations. So don't think that your professional advisor is going to step out of a family gathering to help you on that last bit of planning that you want to get done before the end of the year. Tip number five, as a business owner, you do have one bit of planning that you do not have to pay for until you file your returns, and that's profit sharing plan contributions to your retirement plan. So you can actually deduct profit sharing plan contributions in this year, even though you don't make those contributions until next year. The only caveat there is that you have to make those contributions before you file your income tax return in the spring, or if you extend your return further into the year. Be sure, though, that you contact your retirement plan advisor to have him or her run some scenarios for you. And the reason why that is important is because you do need to adequately budget for that expenditure whenever it comes due, and you also want to have a good idea of what sort of tax deduction that's going to provide you on the current year return. Lastly, fourth quarter payments are not due until January the 15th. And so if you've done all of this tax planning and you still find yourself a good bit short on your taxes, January 15th is really the last time to make a catch-up payment to get you squared away for 2019. Obviously, whatever is due you can pay with the return, but your preference would be to pay in as close to break even as you can, or certainly enough to avoid underpayment penalties, so that you are able to make those payments, those final payments, on April 15th when you file. I hope this short video has been helpful. If you have any questions for me, you can email me or leave me a comment. Thanks a lot and have a great day.